Join us now, not Stephanie Link. Stephanie Link, Hightower Chief Investment Strategist, a CNBC contributor. It's like the Journal was reading your mind. Tech's expensive, right? But it's all tech this week, Steph?
Yeah, I mean, if you add up Microsoft, Apple, Meta, and Amazon, it's 19% of the S&P 500. And obviously, we're all paying attention very closely to how they're going to report. And I think they're going to be good, Joe. I own Amazon, I own Meta. I think those are the two that are going to be good. I think Microsoft is going to be fine, but it's very expensive at 35 times. I think Apple is the one that's the most controversial. And I think we've got to watch the gross margins on Apple, because I think the numbers for this quarter will be fine, but the guidance in terms of what the tariff impact will be on gross margins, that I think is going to be very much the focal point.
Apple over the years, one of these times it's going to be different this time, I guess, but you have never gone wrong buying Apple when it's sold off a little bit. Could this be the time when it's not an obvious? I mean, I would take the chance, because by the time you're right on this, it could be 50% higher than where it is now.
For sure. And again, it's really going to be depends on what they guide on the gross margin side. I think, the services business is still humming. The products, we know people want them. They have a new thin air iPhone coming in the fall, so you have a new product cycle. Here's the thing, though. I just don't think that you're going to have a super cycle for the next phone, because you don't have the AI component in it. So that is the issue in my mind. That's the reason I don't own it. And you're paying 29 times forward estimates for like mid-single digit revenue growth and maybe gross margin contraction. And I know it's kind of like a 2-quarter issue thing, but I think we have time on it to buy it anyway.
So summarize what we know so far, even though there's a lot more to come. Can you make some definitive statements about how earnings have been, and you can talk banks or what, you can go things other than tech.
So 32% of the S&P 500 have reported earnings, and you're running at about 5% revenue growth and about 8.5% earnings growth. That's good. In a 2.5% GDP world, that's what you would expect. We've been talking about that for months and quarters now. I expect 10% earnings growth for the full year, and I think when all is said and done, 10% for this quarter. Interestingly enough, right, you mentioned the banks. So the banks, all of the large cap banks beat estimates in the second quarter for only the second time in 66 quarters. I think you want to own the banks. And we talk about sky high valuations in the market. Well, these stocks are trading at 12, 13, 14 times earnings and 1.2 to 1.5 times book if you exclude JP Morgan. The next theme is onshoring and reshoring. I mean, GE Vernova had a book to bill of 1.3 times. I mean, and they raised numbers to the high end of the expectations. The visibility is remarkable and the margin story still. So I still like that electrification theme. Quanta, Eaton, Rockwell, Vertiv, those kinds of names. Aviation. GE posted their engines business, CES, that's their engines division, 30% growth. I mean, that's on fire. And that has everything to do with Boeing getting its act together again. And they report tomorrow, Boeing does, and I expect a very solid number. And then lastly, we had Freeport-McMoRan report and actually increase their copper demand forecast for the second half of the year. And I don't think people really paid attention to it because the stock fell. So I think that there's a lot in earnings season that you and I call silly season because stocks act funny and not the way they should. And that's what gives you the opportunity.
Hey, Steph, let's talk a little bit just about this deal with the EU and then the deal with Japan last week. I know we still don't know a lot of the details, but the purchases that they've agreed to make, I think mostly in energy and technology and then even defense. There are some people out there saying, hey, this is a reason to really look kindly on NVIDIA, Palantir, Broadcom, and a list of others. You agree with that?
100%. I think the fact that we have the tariff deadlines at the end of this week, it's going to be, in my mind, kind of a non-event because we are chipping away at various different deals. And now we have a little bit more certainty. So we had a ton of uncertainty in April. Now we're getting more. I would argue a lot of this is priced in because you really wanted to be buying back in April. And I was actually buying, well, back in February, March, and April. But now a lot of this is in the market, but it's good news. I mean, I take good news as good news, Becky, and I think it's going to bode well for visibility, for better growth, better economic growth, and better earnings. That's really what I care about, is the earnings side.
So the Fed doesn't do anything, and they probably say the same thing, which is like, yeah, we're thinking about it, but we're still worried about the tariffs and what that does to inflation. We will get an inflation read, too. But anything new, anything earth-shattering that can come from the Fed this week?
No, I will say that, yeah, I think it's going to be a non-event, but I will say last time when Powell spoke and said that they would have already cut if it weren't for the unknowns about the tariffs. To me, that was really much more dovish than I had expected. So I expect him to say this again and just reinforce that they're watching, they're waiting. I'm in the camp that the tariffs are not going to be massive inflationary in terms of the, in terms of higher costs. You'll see some, but I think companies are going to do a really good job at mitigating them as best they can, either restructuring, cost cutting, or price increases. But I don't expect a ton on the price increase front. We haven't heard it. We haven't even seen it.